Ever felt the sting of, "I wish I bought earlier"? Bitcoin's journey is a masterclass in market psychology, often leaving investors chasing ghosts. But what if you could transcend the noise and truly understand its profound potential, transforming regret into strategic foresight? Bitcoin's history is a captivating saga of dramatic price swings, a pattern that has repeated with remarkable consistency. In 2011, it soared to $30, only to crash to $2, prompting many to declare it a fleeting bubble. This early volatility set a precedent for future cycles. Just 2 years later, in 2013, Bitcoin defied expectations, rocketing to $1,000 before plummeting to $200. Critics were quick to label it a bust, yet its underlying technology continued to evolve. These early tests of resilience proved foundational for its long-term trajectory. The iconic 2017 bull run saw Bitcoin reach an astonishing $20,000, capturing global attention. However, the subsequent drop to $3,000 led to widespread pronouncements of its demise. Each death proved to be a temporary setback, a mere pause before the next ascent. The most recent major cycle peaked in 2021 at $69,000, followed by a significant correction to $15,000, famously dubbed a crypto winter. Yet, as we look towards 2025, Bitcoin is projected to exceed $110,000, leaving many to lament, "I wish I bought at $15,000. This recurring sentiment highlights a fundamental truth about market behavior. This cyclical pattern is deeply rooted in human nature, a predictable dance between fear and greed. People are often drawn into markets during periods of euphoria, chasing rapidly rising prices. This phenomenon, known as FOMO, fear of missing out, drives speculative buying. Conversely, when prices correct, panic often sets in, leading to emotional selling at the lows. This FUD, fear, uncertainty, doubt, can be overwhelming, causing investors to abandon their positions just before a recovery. It's a classic trap for retail investors. The regret of, "I wish I bought at the dip" is a common refrain, yet dips feel catastrophic in real time. The clarity of hindsight makes past opportunities seem obvious, but navigating market downturns requires immense conviction. True conviction comes from understanding, not just hoping. Bitcoin millionaires didn't achieve their success by perfectly timing the market's peaks and troughs. Instead, they grasped its fundamental value proposition and accumulated strategically. They understood that Bitcoin's value was clear, irrespective of its current price. They bought because they believed in the technology and its long-term implications, not solely because the price was low. While others waited for an elusive, perfect entry point, these savvy investors consistently built their positions. This patient accumulation is a hallmark of successful long-term investing. To truly understand Bitcoin, we must look beyond its volatile price movements and focus on its core principles. These fundamentals are the bedrock of its long-term value and resilience. They provide the analytical framework for informed investment decisions. One of Bitcoin's most compelling features is its fixed supply of 21 million coins. This scarcity stands in stark contrast to traditional fiat currencies, which can be printed indefinitely by central banks. In an era of increasing global money printing, Bitcoin offers a predictable, deflationary alternative. Its decentralized nature is another cornerstone. Bitcoin operates on a distributed network, meaning no single entity controls it. This decentralization ensures censorship resistance and security, making it a truly global and permissionless financial system. For tech enthusiasts, this architectural brilliance is a key draw. The network effect is also profoundly important. As more users, developers, and businesses adopt Bitcoin, its value and utility grow exponentially. This positive feedback loop strengthens its position as a global digital asset. Each new participant adds to its robustness. Bitcoin offers unparalleled global accessibility and financial inclusion. Anyone with an internet connection can access and use Bitcoin, regardless of their geographic location or banking status. This empowers individuals in underserved regions, providing a pathway to financial freedom. Furthermore, institutional adoption is rapidly accelerating. Major financial institutions, corporations, and even some governments are increasingly recognizing Bitcoin as a legitimate asset class. The introduction of spot Bitcoin ETFs has opened new avenues for traditional investors, signaling a maturing market. This institutional embrace provides a reassuring validation for new investors. Given Bitcoin's inherent volatility, a strategic approach is essential for long-term success. This isn't about getting rich quick. It's about building wealth systematically. Understanding and implementing sound investment principles can mitigate risk and enhance returns. One of the most effective strategies for navigating volatile markets is dollar cost averaging, DCA. This involves investing a fixed amount of money at regular intervals, regardless of the asset's price. DCA smooths out your average purchase price, reducing the impact of short-term fluctuations. It removes emotional decision-making from the equation. Developing strong conviction in Bitcoin's purpose is paramount. If you understand why Bitcoin exists, its role as sound money, a hedge against inflation, and a decentralized alternative, then price swings become mere noise. This deep understanding allows you to hold through downturns with confidence. Effective risk management is crucial for any investment portfolio. While Bitcoin offers significant upside potential, it should be part of a diversified portfolio. Never invest more than you can afford to lose, and ensure your overall financial health is secure. This balanced approach protects your capital. Successful Bitcoin investors learn to ignore short-term price movements. The daily, weekly, or even monthly fluctuations are often irrelevant to the long-term thesis. Focus on the bigger picture: Bitcoin's continued adoption, technological advancements, and its role in the evolving global financial landscape. Patience is a virtue in this market. Despite the inevitable future dips and crypto winters, the long-term outlook for Bitcoin remains overwhelmingly optimistic. The foundational elements supporting its growth are strengthening, not weakening. This positive trajectory is driven by several key factors. Technological advancements continue to enhance Bitcoin's capabilities. Innovations like the Lightning Network are improving scalability and transaction speed, making Bitcoin more practical for everyday use. These developments address previous limitations and expand its utility. Regulatory clarity is slowly but surely emerging across the globe. The approval of spot Bitcoin ETFs in major markets is a significant step towards mainstream acceptance. As governments and regulators gain a better understanding of digital assets, the environment for adoption becomes more stable. Macroeconomic tailwinds are also playing a crucial role. Persistent inflation, increasing national debts, and a growing distrust in traditional monetary systems are driving a search for alternative stores of value. Bitcoin, with its fixed supply, is increasingly seen as a viable hedge against these challenges. Bitcoin is evolving into a global reserve asset. As institutions and sovereign entities begin to allocate portions of their treasuries to Bitcoin, its status as a legitimate and essential asset class will solidify. This shift will further de-risk the asset for broader adoption. The skeptics will undoubtedly continue to claim, this time it's different. It's really dead. However, the evidence points to a different conclusion. Bitcoin's fundamentals are not just holding steady, they are strengthening with each passing cycle. The truth is, the best time to buy Bitcoin was when you first understood its profound purpose. If you grasp why Bitcoin exists, its revolutionary potential to reshape finance, then price swings transform into mere background noise. Your focus shifts from speculation to conviction. Those who regret not buying Bitcoin at $1 will likely regret not buying at $100,000 when it eventually reaches $1 million. And they will regret not buying at $1 million when it ascends to $10 million. This pattern of regret stems from focusing solely on price, rather than understanding the underlying purpose and value. The real question isn't whether Bitcoin will rise significantly in the next 5 years. The analytical and fundamental indicators strongly suggest it will. The more pertinent question is whether you will be among those who understood its fundamentals, held through the inevitable volatility, and reaped the rewards. Or will you be one of those still saying, I wish I bought at $110,000? Don't let past regrets or future fears dictate your financial journey. Take the time to truly educate yourself on Bitcoin's fundamentals, its technology, and its long-term vision. Start building your conviction today. Begin with a small, manageable investment using dollar cost averaging, and commit to holding for the long term. The future of finance is unfolding, and your participation starts with understanding.